Where banks are silent, we speak. A podcast by UMUshroom.
Dear community, welcome to our podcast, What Your Bank Doesn't Tell You. We are coming close to the end of our investment challenge in midst of very turbulent markets and in midst of tariff war.
Hello also from my side, and Luba, as you say, turbulent markets, and I believe it was kind of the perfect environment for such an investment challenge because we have seen everything. We have started with very bullish markets, and then we have seen the crash in the markets, a crash what we haven't seen for many years, I would say, and now we are kind of modeling through a bit. So we have seen all the different phases, and it's very interesting to see how the various portfolios actually perform under these circumstances.
Well, I can tell you how mine performs. I have exactly one green stock and everything else is red. It was interesting, as you say, we started investing on the 3rd of March and we were still in this kind of a bullish mode. I don't think that people really took Trump seriously when he said he's going to put tariffs on pretty much everything. And I think the surprise was very big and it hit the markets very hard.
Yes, and I mean, including me, for a very long time, I was fully convinced that he's just using the tariffs to push through some geopolitical negotiations until we prepared our last podcast about the tariffs, when we really dig through the various information material and the motivation behind Donald Trump and the US. So then my attitude or our attitudes changed a bit. But yes, as you say, I think at the beginning, everybody was just assuming it's a mood.
And it actually took a while for the markets to absorb the information because he started with the tariffs on the 1st of February. And I remember mid-February, we were still at the highest of the bull markets. And then it took like 2 weeks' time until markets to come down from this height and to start absorbing the information. And then in March, we really headed into a crash. I think in February, in what we saw the last couple of days, last week, 10 days ago with S&P 500 and NASDAQ correcting on a daily basis 5%. I don't think we've seen that at least since Corona, if not even since 2008.
No, definitely not. And you mentioned your portfolio. I believe my portfolio has almost the same negative performance as yours. So you're in good company, or I am in good company.
In a very good company.
And maybe to my strategy, I put many of some favorite stocks in the portfolio, but also very high beta stocks. So they suffered a lot over the past few weeks. And then, similar as what you like to do, I always bought the dip and it kept dipping. So I was kind of running behind the market a bit. So, but we have seen a bit of recovery of my performance over the last few days, and there are still some days to go. So maybe I catch up.
You'll probably certainly catch up. My strategy is interestingly similar. I have 60% in something which we call the core strategy. And I invested in Euro Stocks 50, and I invested in, I have NASDAQ, I have DAX, SMI, and that wasn't a good moment to enter, but I kept it actually. And one I sold, and I think it was Asia tech stocks. They performed at the beginning at least well. But then I sold them, and my best performing position is one of my favorite stocks, Eon, and it's my quantum computing stocks. The other two I couldn't add on. We need to finally add them on the platform. They're fantastic. It's Rigetti, and it's also D-Wave. They also perform quite well because of the government program which Trump has put in place. But these are niche stories, right? I mean, the majority of the stocks, my whole team was going from 100 to 80. Railway as well, Stadler Railway dipped. A lot of them are actually dipping. So
plenty of buying opportunities, maybe.
Did you see what Hein did? Yes. Oh, he was clever with his leverage stuff.
Yes, that's one of the portfolios we definitely have to highlight of this competition. And Hein, for those who don't know, he's our CTO, and he has actually put on a very clever strategy. He was short at the beginning, leveraged short, and then he turned it around into leveraged long. And I believe now he changed it back into short, didn't he?
Yeah, he was just saying yesterday. A very brave strategy, and I think he really piggybacked entirely through the whole correction mode. But it wasn't only him, though. I mean, we have some fantastic participants which we would love to mention.
Yes, we have Reto,
Reto is amazing.
His portfolio was doing amazingly. So he was actually among the top 3 throughout the entire challenge period. And this is a huge achievement in my opinion.
Yeah. But he has fantastic position. Like Jungfraubahn, and how do you come to that idea? It's a very small stock.
It is, and it's a Swiss stock. And then next to it you have McDonald's and some other US
Which
names.
is kind of a very serious, entirely. But I think McDonald's would be rather, it would be rather on the cyclical side as well. It's not neutral. And then yes, United Steel Corp, which actually is supposed to be punished by all those type of tariffs which Trump put on. But I think the overall ground mood was very good. He was very good in picking up short grow opportunities, I think.
Absolutely. And then very interestingly, we have seen another portfolio, and yesterday it was at rank number 2. And this portfolio actually jumped by 50 ranks. Right. So it was a portfolio which was in the middle, not in the middle field, but not in the top ranks for quite a while. And now this portfolio really jumped. And the title of the portfolio is Waffen, Gold and Buffett. So meaning that investing into defense, gold and Berkshire Hathaway in the end. And this strategy actually performed extremely well over the past few days. And another position which is in the portfolio, and I believe this position might have supported the performance a bit, is leveraged NVIDIA. Yeah. So the recovery in this stock definitely helped.
Yeah, if you got NVIDIA at 84 and all the way through 110, it's a fantastic opportunity. Berkshire Hathaway is very interesting. I was reading the other day about Buffett's position, and he's been basically sitting on pile of cash and short-term treasuries since October, November last year. Kind of expecting really this correction to finally happen. And I know that he sold a big position in Apple early 2024, around March, April 2024. He seemed to have got some of the stuff really right again. Value investor, misses a lot of the tech trends probably, but then again, the fundamental growth of the economy, I think he catches it pretty well.
Indeed, no doubt. And he definitely is an investor getting the big picture and not just punting around and pretty much into this geopolitical discussions. He's on top of it. He knows the bigger context, how things behave. So yes, it could always be a good indication to really watch what he's doing, what many people do anyway. But
he misses the tech trends always. This is the only thing which I'm kind of, surprised about him. But it's you probably, I assume you can't catch everything. I think he's a very good kind of underground groove of what's happening on S&P 500. And probably not so big fan of NASDAQ, I can understand. I think all the snowflakes and all the other AI plays and data providers, he probably...
Not boring enough for him, maybe?
No, he doesn't favor them, but it's fair enough, and it's okay. What we also did is we did some work to see what are the top 10 positions with our people, or the top positions which our people trade on the investment challenge. Who would be surprised? Number 1, NVIDIA. This seemed to be the flavor of the investors since already 2-3 years, and even longer. I still remember 2015 when a friend of mine bought NVIDIA for, I think it was, back then, it was prior to the stock split, but if it would be the stock split, it would be something below $10.
Unbelievable.
It's crazy. Yeah. And the stock, and I remember we were showing NVIDIA in one of the schools with whom we work. And I remember we were showing NVIDIA compared to Apple and Microsoft over the past 10 years. And one of the students goes like, but that's a mistake. And I was like, no, it's not. They really have 30,000% performance. Yeah. As opposed to Microsoft or an Apple, which have around, some 8-fold increase. It's crazy what they did.
It's crazy, and it's all about finding the next one, no?
It's all about finding the next one. I'm pretty sure it's going to be one of my quantum stocks. Let's see. Then you have Bitcoin, another evergreen. MicroStrategy, I still haven't figured out and wrapped up my mind entirely why people buy MicroStrategy. It's probably because it's an elegant way to leverage Bitcoin, even though quite expensive one, though, I think, from what I checked last time. Then, for whatever reason, Eutelsat. Yes, also not a brainer for me, not an obvious one for me. Solana more, and then Apple. And Apple, yes, understandable. Apple is one of the big leverage plays. If you want to play tariffs and gamble around tariffs, Apple is one of the places to go because they were very hardly hit from the first announcements.
And gold is not in the top 5, you say?
No.
No.
I find that cool, but you probably don't. People are missing out. Although actually gold increased 30% since beginning of the year. Mm-hmm. Could you believe that?
Oh, yes.
Yeah, you could. I wouldn't.
And I'm still positive on gold.
Incredible. Yeah, it looks... No, I stick to crypto. That's my gold version.
That's okay. That's okay.
Even though they corrected a lot. I know our youngsters would support us in terms of cryptos. But no, it's interesting. I mean, for me, the biggest surprise was actually Eutelsat. Be interesting to understand why people would keep it. So those who are... Feel free to write us. We are happy to hear your comments. The other ones are pretty trivial, right? I mean, pretty obvious one. Not trivial, but obvious one.
Yes. No, but for me, it was interesting to see the different strategies of the investors or the participants. And for me, and it's kind of an obvious conclusion, but trading is not the same as investing. And even though we extended the period of this investment challenge to 8 weeks, which is already quite a period. The strategies you apply is slightly different for these 8 weeks than how we would do that for our investing portfolios.
Absolutely.
And you have to take a bit more risk to really have the chance to be in the pole position for this investment challenge for a limited amount of time. But if you are investing, then maybe how we set up our portfolios also for the challenge is a bit more reflecting the investing strategy, even though we added some of the high beta stocks. And
absolutely, I think on the core side, and I think for people who really invest long term, the wealth building element, this situation was actually very interesting because traditionally, you will stick to what you bought. You would not sell your core part in dipping markets. A lot of people actually panicked, and we keep hearing, and a lot of questions reaches out. Shall I sell? And our answer is like in real life, don't sell your core position now. It's not a good moment. Markets are going to recover. We've seen bigger drops. I mean, we're 20% down from the upside, and now a lot of the highest realized levels in February. And now a lot actually recovered again. So this type of, some of the traditional practices which you would see in long-term investing, in building wealth, would not be successful over a period of 2 months' time. Also because we actually really entered the most interesting possible time. We entered it just at the height before the correction.
Yes. It also reminds me to the webinar we did last week together with Invesco and BX and Paul Jackson, the asset allocation strategist of Invesco. He said something very nice. He said, the good news is that every crisis has an end. And the other thing he mentioned was that usually in times of high volatility, what we are having right now, a period of high performance is following. So this gives a bit of hope and actually also supports our strategy. What we are usually doing is adding positions when markets are falling. Yep. Or maybe not at the very beginning. There is also the saying, never catch a falling knife. But once we have seen a first drop and we get the feel that somehow the drop is slowing or kind of bottoming, then yes, for us, it has been a good strategy over the past few months even to add to our portfolio when markets are correcting.
Absolutely. And I think also here it's very important to have a discipline. What I would typically do is each 5% drop of Nasdaq, I would buy certain amount. And because but it's also important to stay liquid on a part of the strategic asset allocation, because you would like, as you say, to use these opportunities. And at the end of the day, no one ever knows. It's very interesting what's happening currently on the markets. For those who are actually following, we were discussing it yesterday. The probability of recession is currently at roughly 45% on average, and I think Goldman even gives a chance of 65%. But I want at this point speaking to in a conjunction to what you mentioned about Paul Jackson, saying that after periods of long correction and of strong correction, not long but strong correction and high volatility, followed by high performance. I remember last time we had such high probabilities of recession in 2022 October. And the years which followed were like the biggest bull market ever. So it's very difficult to predict. Remember also one thing for those who are listening to us, we know it because we've been through 2008 and we've actually been through the .com. I think this was the first crisis which we saw consciously. And what is very interesting is that periods of correction are much shorter than the bull markets. A bull market on average is 6 years. A correction is 1 year, one year and 3 months. And even now where we are relatively pessimistic, you can see in the projections of the GDP growths across the world that you see already the first substantial growths already, like in 2-3 quarters. Mm-hmm. So correction is intense but short-lived, unless, of course, something very structurally changes. Mm. But I don't think the tariffs would crash to that extent the market. Or maybe I'm too optimistic.
No, I don't think so. And listening to you, I think we can also say that when we speak about trading, very short-term oriented, of course, there are the chart analysis and other tools to maybe predict a bit what the market is doing, but it involves also, I would say, a bit of luck.
Oh yeah, it's toss a coin.
But on the other hand, investing, it requires much more skills, or you can learn it. And this is what is really important to us as well, to teach people how to invest and how to build up wealth over a certain period of time, and not just by good luck. Today I'm up 10%, tomorrow I'm down 20%. And this is also the reason why we actually set up this investment challenge to give a tool to everybody to get a feel for investing, for the markets, and also share our know-how when it comes to investing knowledge.
Absolutely. It's a very valid point that you are mentioning, and it's true. It's good that our users got a contact with what trading means, but investing is a handicraft. It's a handicraft the same way you would produce this table, or you would cook, or you would create a piece of clothing. There are certain rules. There are certain basic parameters, there are certain basic dynamics which people should know. There are components, ingredients, we call them asset classes, which actually all contribute to this long-term wealth generation. And if a person adopts the basic knowledge and a disciplined approach, and here discipline is key, actually chances are pretty high that this person would really build long-term wealth.
This is pretty much how the very rich people are doing it.
Exactly.
If you have plenty of money, then usually you get also advice by a bank or a financial advisor, and you don't have to do everything by your own. But these people, they are heavily invested, and they are heavily invested long term, and they know the basics, or they are told the basics. And this is our ambition, that we spread that know-how to everybody. And if you are warm after this investment challenge and want to keep learning and learning how to handle your portfolio, to stake up your investment knowledge, then we can also recommend to participate in our Lerne or Learn educational program. This program is set up in a way that after the program, and we will come to that, how it works, you're basically in a position to manage your money in a very easy way on a daily basis.
Absolutely. And our ambition with this is to really give you the basic tools to be independent. And the outcome would be, after learning how to budget, it's very important to know how much money you can invest without suffering some cuts on your in your life, covering your basic costs, covering also your costs for perks, for hobbies, etc. We would also teach you what are the major ingredients, which we call asset classes, like cash. By the way, for those who think, I keep my money in cash, I'm not invested, wrong. You cannot be not invested. Even cash is an asset class, and we teach that. Then we have bonds or fixed income, equities, commodities, cryptocurrencies. And then we go into the basics of portfolio building. And exactly these basics of portfolio building are these skills, these basic rules which convey you the discipline and the knowledge to be able to set up, at the end of the day, your own portfolio strategy. And this portfolio strategy could be translated into a saving and investing plan, very easy to be used with, to be applied with Neon, for example, which is one of our partners on the contest and has a fantastic setup for facilitating exactly building saving plans. And yes, it's all about being disciplined, having a clear vision, having a clear goal, and you'll be successful, I would say.
Mm-hmm. Yes, and I believe, one thing what I'm keep hearing is that there is so much information for free in the internet about investing, but usually you learn that, yes, ETFs are important. You have to do a strategic ETF portfolio. But then how do you actually do it? And I had a call with a client, with a partner 2 days ago, and this person was also saying, yes, I know that I have to invest in ETFs, but the point is I don't know how.
And which,
etc. And this is how we set the focus. It's not about just what you have to do. It's on the how you do it. And I believe this is the big difference. And also, the difference of our backgrounds, because we worked on the trading floor, we worked in the creation of investments, we worked in the selection of investments, we worked in the advice of investments. So we know investments inside out, how professional clients are buying it, how private investors are buying it. We know everything, every perspective. And this makes it a lot more easy for us to really bring across how the handcraft is performed. And I think this is the big difference, also comparing it to other educational programs.
I couldn't agree more. And I remember we mentioned this conf call with a client and used a very nice analogy that we deliver not only the furniture, but we kind of deliver it with the manual and the description how to put it together, and not only the furniture pieces. And that is very true. For example, when it comes to picking up ETFs, which one do you use? Shall we buy SMI ETFs, SPI ETFs? What is SMI? What is SPI? What to look into?
Yes, and if you decide for an SMI ETF, there are plenty of them.
Exactly.
And which one do you choose?
Yeah, absolutely. And if you want to be global, why does it make sense to be global? Does it make sense to be in the US? US is stock savvy. Does it make sense to be invested in Europe? In Europe, yes. All Europe, Germany, France, UK. What are the differences? Questions over questions which are essential for value generation, which we actually cover in this educational program. And we tell you also at what parameters you should look at and compare. And these are very valid points that you're mentioning. Absolutely.
I think this is a perfect summary and brings us to a close of this podcast today. So for us, it was a big pleasure to have you on this investment challenge for the past 8 weeks. We hope to continue collaborating also with the education. And with this, we would like to get your feedback, your experience over the past 8 weeks, so we can also transform these inputs and questions into know-how also to the community, to other people, to other contestants. And with that, I wish you a lot of luck with the financial markets and keep investing.
Keep investing and stay tuned next year. Once again, the same. Ciao.
Where banks are silent, we speak. A podcast by UMUshroom.